Well, I'm Jogendra Rana. The topic of the day is insurance marketing firms in India. Insurance marketing firms in India. The Insurance Regulatory and Development Authority of India, through the IRDA Registration of Insurance Marketing Firms Act 2015, introduced the concept of insurance marketing firm in India. So, insurance marketing firms are an entity registered in India that are allowed to solicit or procure insurance products, to undertake insurance service, and to distribute other financial products with the government of India raising the FDI in insurance. The insurance industry is set to witness robust growth in the coming years, and there exists tremendous potential for those starting an insurance market firm. So the IRDA has allowed for the registration of insurance marketing firms so that the entrepreneurs and insurance agents can start their own insurance distribution company. As per the registration of insurance marketing firm regulation 2015, an insurance marketing firm is defined as an entity registered by the IRDA to solicit or procure insurance products, to undertake insurance services activities, and to distribute other financial products. So, activities of an IRDA insurance marketing firms are that they solicit and procure insurance products. Means solicitor procures insurance products of two life, two general, and two health insurance companies at any point of time. Now this provision has been divided. So, in respect of general insurance, the insurance marketing firm would be allowed to solicit to procure only the retail lines of insurance products as given in the file and use guidelines, namely motor, health, personal accident, household shopkeepers, such as other insurance products procured by the IRDA. So these firms provide insurance servicing activities like undertake back office activities of insurers as allowed in the guidelines, some outsourcing activities by insurance companies issued by IRDA, become an approval person of the insurance repositories, undertake survey and loss assessment work by employing on their roles licensed surveyors and loss assessors, and perform the other insurance related activities permitted by IRDA from time to time. So, marketing of other financial products, namely mutual funds of mutual fund companies regulated by SEBI, pension products regulated by PERDA, other financial products distributed by SEBI licensed investment advisors, banking financial product of banks and BFC regulated by RBI, non-insurance products offered by Development of Post Government of India, Department of Post Government of India, any other financial product or activity permitted by the IRDA from time to time. Now, there are new guidelines for insurance marketing firms because the IRDA has issued new guidelines recently, and these guidelines include that the number of tie-ups between corporate agents and insurance marketing firm has been raised by the Insurance Regulatory and Development Authority of India. With more options and access to insurance policies, policyholders will now have more choices. So the regulators has stated that the maximum number of types for corporate agents and insurance marketing firms have been increased in order to enable the policyholders prospects to have a wider choice and access to insurance through various distribution channels, and facilitate the reach of insurance to the for last mile. So for the distribution of their insurance products, a CA means corporate agent can now partner with 9 insurers, up from 3 insurers, and the IMF, that is insurance marketing firm, can partner with 6 insurers, that is up from 2 insurers. So in each business line of life, general, and health, the entire state in which they are registered is now included in IMF's operational region. So, insurance marketing firm is an opportunity for financial entrepreneurs who want to offer financial protection through professionally managed businesses. Insurance marketing firm can be a company, LLP, cooperative society, or any other type of organization that the authority may choose to recognize. An entity that has permission to engage in insurance service operations is referred to as an IMF or insurance marketing firm in the legal terminology set forth by the IRDA. So, as far as the key highlights of these IRDA guidelines are concerned, let's see. The first one is increased tie-up limitations for intermediaries, because the maximum number of partnership between corporate agent and insurance marketing firms have been increased in an effort to provide policyholders with more access to insurance through multiple insurance channels and to make it easier for insurance to reach the last mile. So the corporate agent and the insurance marketing firms can now partner with 9 and 6 insurers respectively, as opposed to just 3 and 2 insurers previously. So for the distribution of goods in the life, general and health insurance sectors, the geographic scope of the insurance marketing firm has also been increased to include the entire state in which they are registered. Secondly, regulatory sandbox. The regulatory sandbox is a framework that gives businesses a regulated testing environment in which they can evaluate new products and technology. It encourages technological advancements and innovations in the sector. So the regulatory sandbox rules have been changed in a few ways to permit insurers and intermediaries to experiment continuously. These changes include extending the experimentation period from 6 months to 36 months and switching from batch-wise clearances to continuous clearances. So a new clause for reviewing applications that were turned down under the sandbox has also been added as part of the changes. Third one is investment standards. So special purpose vehicles investments are now optional for private equity funds and giving them more flexibility to make direct investment in the insurance businesses. Subsidiary companies can also promote insurance companies subject to certain conditions. In the future, investment up to 25% of a single investor paid up capital or 50% for all investors combined will be recognized as investors, and contrast investments that will only be treated as promoters. In the past, the requirement of individual investors was 100%, was 10%, and for all investors together, it was 25%. So the insurers must have a positive solvency history for the previous 5 years and be a listed firm to order for the promoters to dilute their interest up to 26% under a new clause. The indicative standards for determining the fit and proper status of investors and promoters are included. According to IRDAI, the lock-in term for investments for investors and promoters has been set based on the insurer's age. Then the appointed actuary. Appointed actuaries are essential to the operations of insurance. So the experience and qualification criteria have been made flexible to ensure a sufficient supply of actuaries in the field. A crucial component of an insurer's health is the insurer's ability to sustain solvency, and AA appointed actuary plays a vital part in doing so. So by adding clauses for risk identification, monitoring, reporting and action, recommendations for risk affecting the company's solvency situation, appointed actuary has increased its responsibilities. Additionally, insurers have a duty to guarantee that appointed actuaries can carry out his duties in a professional manner. Then solvency standards for general insurers. So the period for taking into account state, central government premium dues for calculating solvency position has been extended from 180 days to 365 days to help insurers more effectively use their capital and resources and to increase insurance penetration in crop insurance. Also, the solvency ratio for crop insurance has been lowered from 0.70 to 0.50, which will release the requirement for insurers by around 1,460 crores in capital. So other forms of capital is also there. Now, benefits of guidelines. The regulator is taking another steps towards achieving its goal of 100% insurance penetration by 2047 by raising the maximum number of insurers that can join forces with corporate agent and insurance marketing firms. So with this move, will give customers more options for insurers and products. It's also anticipated to spur innovations in product development, improve technology use, and data analytics that will result in a seamless customer experience, increasing the level of financial protection for corporate and IMF customers. So as a result, the bancassurance channel, which has emerged in recent years as the second largest distribution channel for insurers after the agency channel, would get a considerable boost. Also, they have suggested removing the limit on the amount insured and allowing corporate agents to put commercial lines general insurance covers. So, in addition to distribution, the regulator has suggested significant revisions to the investment standards for insurers, including new requirements of debt security investments. So, these revolutionary changes will make conducting business easier, free up distribution models, promote customer-oriented innovations, and increase the sector's investment with a single action. The regulator has resolved a number of long-standing industry difficulties. These improvements will significantly advance attaining the regulator's inspiring goal of ensuring insurance for everyone. So, as far as these insurance web aggregators market is concerned, this is insurance marketing firms are increasing now every day because requirement for obtaining insurance marketing firm registration has been simplified, and upon satisfying the above eligibility criteria, the applicant can make an application to the IRDA in the given format for registration as an insurance marketing firm. So the applicant would provide registration as insurance marketing firm if the IRDA satisfies with the applications. The registration for insurance marketing firms issued by IRDA would be valid for a period of 3 years after its issuance. So these marketing firms are working very well because they are engaged in insurance business with many companies and rendering their services actively. IMF is an opportunity for financial entrepreneurs who wants to offer financial protection through professionally managed businesses. Insurance marketing firms can be a company, LLP, cooperative society, or any other type of organization that the authority may choose to recognize. An entity that has permission to engage in insurance service operations is referred to as an IMF or insurance marketing firm in the legal terminology set forth by the IRDA. While these insurance marketing firms are working well, but their expansion is required because throughout the country they have to operate. They are the licensed intermediary. They have got the authority to work well, work across the country, because IMF is a licensed entity in new distribution channel approved by the IRDA as per the Govardhan Committee report submitted 2007. It suggested setting up a group of agencies to improve the market penetration of the insurance business. So it would enable merchandisers to sell mutual funds, pension plan, stock, and other financial services under one umbrella. IMFs are similar to distribution companies having multiple tie-ups with insurers, a model akin to independent financial advisors. In continuation to these recommendations, certain regulations were released on 21st January 2015 by the IRDA pertaining to the registration of insurance marketing firms. So IMF can be a company, LLP, corporate society, or any other entity as specified in the regulations. However, an IMF can conduct unlimited business with a single company. Insurance marketing firms can engage in the plenty of activities which are permitted, because being IMF is advantageous. They are having the better commission and income, opportunity to become a part of the healthy corporate and professional setup. The legal creation is there, offering multiple product choices. Business expansion opportunities through channel sales are there, unlimited rewards and the commission is there. The one customer, one advisor model allow you to enjoy maximum wallet share, ensuring increased income, opportunity to increase customer base by fivefolds, and enable to cater the investment needs of rural, semi-urban, and urban customers. So there is a comprehensive understanding and experience of this initiative, and this initiative is working very well in India now. The marketing firms are expanding and increasing every year. Thank you very much.